Fears that Evergrande will collapse. Let's have a look. Hello everyone, Florian.Heise here and welcome to a new episode of HeiseSays. Grab your stein of coffee because there's been a lot of concern and discussion about Evergrande, the largest property developer in China and, well, I think the most indebted company in the world is on the brink of collapse. They're not paying their debts, they're not paying interest payments, and, well, the public are a bit concerned. Now, let's have a look. Before we jump at an article going through it, let's just jump over here. We'll jump over here. We can see their share price. It's, well, listed on the Hong Kong Stock Exchange. Over the last 6 months to last year, it's just steadily been going down from, a 52-week high of $20.40 down to $2.80. Lowest of $2.79. So they're just trending all the way down. Now, one big concern is, from an Australian perspective, is that, well, they use a lot of iron ore, which uses a lot of steel, which uses a lot of iron ore in their construction and their development. We can see here, well, the iron ore price continues to plunge here in Australia, and it's a big component of our exports. Look at that. We're sitting down at $117. Again, will we go below 100? There's a worry. And there's some videos that I just want to draw your attention to. This is people demanding, investors, small retail investors, people who've invested in wealth products, people who've paid deposits on apartments, buying off the plan, guys. It's not just an Australian problem. Demanding their money back. That's a little concerning there, isn't it? Of, people just frustrated and demanding their money. Protesting, public protesting. We'll see if they, give us our money, you can see there. But, there's another video we should look at. China's property market is a little overheated, guys. A little overheated. Let's just have a look at this clip here. Now, this is a series, a whole raft of buildings which are just being demolished. Empty, unfinished projects. Look at that. We've all heard about the empty buildings that have been just demolished, the buildings that have been abandoned, the pointless cities constructed over in China. And there you go. Look at that. Look at the scale of waste there. It's a different world, guys. We're complaining about buildings, about construction issues here in Australia. It's just a different world in China. So let's have a look at this reporting from news.com about it. So, iron ore price drops as Chinese property giant's crisis deepens. Debt-stricken Chinese developer Evergrande has reached crisis point in more bad news for Australian investors and the iron ore price. So, dozens of anxious investors protested outside the headquarters of troubled Chinese property giant Evergrande on Tuesday after the debt-laden firm conceded it was under tremendous pressure and may not be able to meet its repayments. Evergrande's plight has raised fears of a contagion across the debt-mired Chinese property sector, which accounts for more than a quarter of the world's second-largest economy, with a knock-on for banks and investors. Just think about that. Think about that. And everyone's waiting to see if Beijing will step in to bail them out. The Hong Kong-listed developer is sinking under a mountain of liabilities totaling more than $410 billion after years of borrowing to fund rapid growth. The situation is being watched closely in Australia. Should Evergrande collapse, the reduction in construction would significantly reduce demand for iron ore. That, in turn, could push the price of iron ore lower. Today it was trading at $164 per tonne, down almost 2 cents. This article is just from September 15th, everyone. This is from yesterday. And, well, if we're looking right here, there you go. We're sitting at 117 a tonne. This is USD. The article's AUD, of course. So it's still heading a bit lower than where it was, over $200. Remember that. An estimated 60 to 70 people gathered outside Evergrande's headquarters in the southern city of Shenzhen, demanding answers from the company. The anxious investors crowded in front of the building's entrance as police with riot shields were deployed to maintain order, according to AFP reporters at the scene. Our boss is owed over 20 million yuan, 4.2 million, and many people here are owed even more, one man who gave his surname as Cheng told AFP. We are definitely very anxious. There's no clear explanation right now. They should have paid the money when it's due. Well, maybe what if they can't? What if they can't pay the money if it's due? And, if we're seeing iron ore falling and falling, you've got to understand here in Australia, our government has budgeted for, $50 for iron ore price. That's what they're aiming at. But if we look at an example here, everyone, this is government revenue in Western Australia. You can see how much of it comes from iron ore just for WA, and it will have flow-on effects through the entire economy. Another man outside the headquarters said his firm was a supplier of Evergrande and is owed more than 30 million, so 6.3 million. See, this is the thing, guys. This is a developer. We've all heard about developers here in Australia going under. What happens? Who cops it? How many subbies cop it? How many small businesses cop it? How many material suppliers cop it? He said he'd previously been offered repayments in the form of property by the group, but they failed to reach agreement on this offer. So they're just completely desperate. My family has also been threatened. Evergrande employees in my hometown warned my mother to tell me to stop causing trouble and come home, he said. There you go. Evergrande was downgraded by 2 credit rating agencies last week, while its shares tumbled below their 2009 listing price. Ooh, with a barrage of bad headlines and a speculation of its imminent collapse on Chinese social media. On Monday, the company insisted it will avoid bankruptcy. But on Tuesday, it issued another statement to the Hong Kong Stock Exchange saying it had hired financial advisors to explore all feasible solutions to ease its cash crunch. The statement warned there were no guarantees Evergrande would meet its financial obligations. The firm blamed ongoing negative media reports for damaging sales in the pivotal September period. Well, here's the thing. No one's going to buy anything from them now. Who would put a deposit down on an apartment? Why would you? Wait for it to collapse and then get it scoop it up afterwards. So, it's resulting in the continuous deterioration of cash collection by the group, which would in turn place tremendous pressure on cash flow and liquidity. Shares in the firm fell more than 11% Tuesday and are down almost 80% since the start of the year. The firm has some 1.4 million properties that it has committed to complete, around 1.3 trillion yuan in pre-sales liabilities. Oh boy. As at the end of June, according to an estimate by Capital Economics. Evergrande did not respond to a request from AFP for comment. The collapse would be the biggest test that China's financial system has faced in years, said Mark Williams, chief Asia economist at Capital Economics. Yet markets don't seem concerned about the potential for financial contagion at the moment, he said, adding, that would change in the event of large-scale default, which would prod the central bank to step in and buttress the teetering developer. I mean, here's the thing. How many people expect it to completely fall over without intervention to occur? What do you think will happen? Do you think they'll let it collapse and all the people get hammered? Or how many small investors, small families have bought apartments off the plan? Do you think the government in China is going to let that fall over? The most likely endgame is now a managed restructuring in which other developers take over Evergrande's uncompleted projects in exchange for a share of its land bank. The picture of angry investors outside the firm's headquarters could also cause alarm in Beijing, where leaders are keen to keep a lid on any form of social unrest. Evergrande has already sold stakes in some of its wide-ranging assets and offered steep discounts to offload apartments, but still reported a 29% slide in profits for the first half of the year. The developer was founded in 1996 by Zhu Jiayin, who went on to become China's richest man during the country's property boom of the 1990s. He poured money into massive developments in new cities, raising $12 billion in Evergrande's 2009 IPO in Hong Kong. A year later, he bought a struggling football team and renamed it Gaozong Evergrande, lavishing millions of dollars on salaries for its stars. Evergrande started to falter under the new 3 red lines imposed on developers in state crackdowns in August 2020, forcing the group to offload properties at increasingly steep discounts. So there you have it, everyone. So what's the solution or the takeaway to this? Well, it's going to be one to watch. It's definitely having an impact on, at least the futures for iron ores. And that's going to flow through to here in Australia. And we're seeing it manifest in the share price of iron ore miners like Fortescue and others. It may have an impact and a trickle through to parts of our economy. It could impact the CapEx. And then that's not even saying the potential property exposure that Evergrande has here in Australia or investors here in Australia that have exposure to them. But here's another consideration. If you've got all of this risk of property here in China, could that make Australian investment and Australian property seem all the more appealing on a global stage? Could this be a good thing for Australian property, everyone? You tell me. You let me know. And, is Beijing going to step in and buttress this faltering developer? Is it a calamitous end? Or is it going to be a whole bunch of nothing again? You let me know your thoughts and opinions on this one in the comments down below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. And Stake, until the end of the month, they're having a beta trial where you can get free trading for CHESS-sponsored ASX shares. So that's what I'm interested in. Any way to save money. You can use our referral links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.